Good afternoon and happy holidays. It is amazing that we are already so close to the holiday season here. I feel like I lifted my head this year in 2020. It's like, oh my gosh, time to go get gifts and get into the spirit. It does not feel like that time of the year quite yet, but I'm sure we are all just as excited as I am to put 2020 behind us this year. Wanted to start out by talking a little bit about some of the data that we went over last week. Thanks as always for joining us here today. And as you know, want to kind of start with what came out last week, and then we'll move into some of the data here this week. But especially this go around, there was a lot that came out on Friday that I think is very important. So we're going to spend some time there. Last Friday, after our last session, we had some big jobs numbers come out. We had non-farm payrolls come out and the unemployment rate. So non-farm payrolls came out, and basically they added about 245,000 jobs. This was quite a disappointment, much less than expected. I think the expectations were somewhere north of 400,000, and really not what we want to see, right? We're trying to get people back to work. We're trying to kind of continue this expansion since the meltdown, I guess, back in March. And we really need to see a lot more people getting back to work to see this kind of continue. So unemployment rate came out actually pretty close to what was expected, which was 6.7%. But keep in mind, obviously, we all know the unemployment rates, those numbers aren't quite perfect, let's call it. If we look at kind of net new jobs in November, I think it was something right around 200,000 jobs added. So, it's good, right? We're seeing things go in the right direction. We're not losing more jobs than we're adding, obviously, which is a good thing. It's not as quick as it was, if we look back September, October, those kind of months, or even a little further back, but we are still seeing growth in the job market, which is a great thing to see. I don't think anybody expected that we'd be adding, as many jobs as we were forever. At some point, right, when we have a quick rebound like that, just like the markets, we've talked about a quick rebound and now slowly tapering off. The same applies to the job market, right? We get this quick kind of bounce off of the bottoms there back in March, and now we're seeing a little slower growth moving forward. So it's all interesting to see. I had hoped and expected maybe a little bit better number there. It certainly wasn't good, but again, those numbers will continue to slow, and I don't think it's possible to expect that kind of exponential growth that we saw ways back there. I think that the number right now is right around 10 million or so jobless in America, but we go back to March and the peak was somewhere north of 20 million, 23, something like that million. So it's been a big recovery, but it's a clear sign that there are still some that are having a hard time in this crazy year that we're living in. And obviously a sign that, there's more to do. So hopefully that continues. Hopefully we get the remaining folks back to work, and we kind of continue to see this recovery that has bounced back so quickly. All right, let's move a little bit into this week. Wednesday, we had job openings. So tying into the 10 million jobless, job openings were about 6.7 million. You look at those two data points together and it's starting to tell a bit of a story, right? We talked a ways back that there was actually more job openings than those who were looking. And 10 million jobless is not necessarily those who are looking either, but it's good to see those numbers semi-close anyway. Today, of course, was initial jobless claims. Numbers came back a little bit. I guess nothing too dramatic. We've kind of seen this kind of continued trend, and hopefully, again, those numbers start to come down significantly rather than staying around the same level. Tomorrow, we have consumer sentiment. Next week, we've got retail sales on Wednesday. You guys have heard me say time and time again, but retail sales are so important for this country's economy. So that'll be interesting to see how that comes out, especially during the holidays. And then the Fed talks, I think the Fed talks on Wednesday as well. And then, of course, initial jobless claims on Thursday. Moving into the question of the week, I wanted to spend some time talking about something that's come up actually a couple times here over the past week or so. And of course, for you guys, if you have any questions yourself that you would like us to address in these weekly updates, you can email us info@mainsailfg.com. That's info@mainsailfg.com. So the question I got a couple times here, and really recently, which is kind of interesting, was concerns or questions about the dollar weakening and what that means to the economy. So I want to preface by saying that, I do see potential signs that the dollar may weaken, but I don't know that I've seen some articles out there that are kind of like doomsday scenarios of this type of situation. And I just don't know that that's going to be the case. I think we may weaken a bit, but we've had such a strong dollar that I think it's kind of how things go. Now, what does that mean? So when the dollar weakens, think about it this way. What that means for us as US consumers, or let's say US businesses, is if our dollar, the purchasing power of what we have in our wallets, drops, as you might imagine, that means we need to spend more of those dollars. We need to have more of those dollars to buy the same amount of goods, right? If a business is buying parts for the latest iPhone, and let's say they're getting them from China, well, they've got to pay more now if the dollar's worth less to get the same amount of goods back from them, right? So as you might imagine, that's where the concern kind of comes in is, okay, so if the dollar weakens, it's going to be a bit of a drag on the US companies and economy and all that good stuff. What I will say is that these companies are smart. They hedge against these things, first off. Second off, again, I don't think it's going to be as big of an issue as we may hear, some of this doomsday stuff out there. But it's also important to understand that, that may be like one thing that's kind of like slowing growth to some degree. But gosh, with everything we've seen, with all the stimulus, with all the spending, with all the interest rates being, keeping low, you pile all that on and, yeah, this is not a great thing for the economy, but with everything else, I don't know that it's as big of a negative as it might be if the environment was less growth oriented. Let's put it that way. Another thing that I think is important to think about though is, is what this means for other countries. So I'm still a little bit concerned about developed international companies, especially with the virus. We've seen lockdowns time and time again, and that obviously hurts their economy quite a bit. But when the dollar is weaker, other countries' economies can do well too. So if you think about like emerging markets, for instance, right? Countries like India, countries like Brazil, whatever the case might be, Russia, they don't have to spend as much to buy our products. And so a lot of times that may mean good things for those companies that are, in those areas as well. It can also mean higher inflation. We've talked about this time and time again, but weaker dollar can also lead to more inflation, which again, with everything else too, certainly is something to pay attention to. So I'll leave it at that. I thought it was a really good question, and I hope that's helpful. As always, I hope these weekly updates are helpful just to kind of condense all the craziness we hear, take it into a, one kind of 10-minute update. And I really appreciate you guys for joining us here each week. If you, again, have any questions yourself, definitely let us know. As I mentioned last week, I also am very excited, big announcement that I shared last week, but I have a book that's going to be coming out sometime around early Q1 of next year, basically just, getting it all wrapped up and finished up. But very excited about that. It's going to be a great opportunity just to soak in some of this type of information, but even more so on the planning level, right? How do we really create a retirement by design? How do we make sure that what we're doing is setting us up for, a retirement on purpose rather than by happenstance? So very excited to roll that out. As I mentioned before, to kind of get this up and running, we're giving away the first 100 copies for free. We're going to give away the book as an opportunity to share some knowledge and hopefully empower you to make some good decisions. And also the first 100 who claim that they would like a part of that book are going to be entered into a drawing for a free plan. So reach out to us, email us if you're interested in receiving a copy. We'd be happy to send that out to you, no charge, and obviously enter you into the drawing as well. You can email us info@mainsailfg.com. And again, we'll see you guys same place here next Thursday at 3 p.m. Please do subscribe, follow us, if these are helpful, and that way you can make sure to get these updates every single week. Again, here every Thursday at 3 p.m. Thanks so much for joining us. We'll see you next week, and happy holidays.